it's like, I don't want to go into that tax closet because I know that's always something there is going to bite me. Well, this time when you go in there, it's something wonderful is going to happen.
Welcome to Clicks and Bricks Podcast. We talk about the entrepreneur mindset.
If you get one shot at this, what kind of shot are you going to take?
If we forget who we are, they're going to forget who you are.
You've got an adversity story that's out of this world.
Everything from that Main Street brick and mortar to that billion-dollar manufacturer.
Hey, Donald, how are you doing today?
Pretty good. How are you doing today, Ken?
I'm fantastic. Thank you for joining us today. You're going to talk to us today about a really, really important program for small business or business owners of all size and kind, right?
Right.
Called the ERTC. Can you tell us what that stands for?
Well, the ERTC is the Employment Retention Tax Credit, and it was originally created with the CARES Act once COVID started and all the shutdowns started to happen. And the ERTC ended up getting lost in the mix, and the Congress started with the PPP, and that kind of started over and got into it. And at first it was, you could have the PPP or the ERTC. And then in 2021, Congress came back with the American Rescue Plan and rewrote some of the legislation and say, well, if you got the PPP, you can get the Employment Retention Tax Credit. And by that time, everything had kind of passed and people didn't really know about it.
Right.
And so it's been kind of going under the radar, and it's been getting more and more attention this past year as more and more small business owners have learned about it. So it's a really exciting program where if you maintained your employees during the shutdowns through 2020 and 2021, the federal government will give you a tax credit of up to $26,000 per W-2 employee. So that's a fantastic add-on, even if you got the PPP loans.
Correct. Yeah. So even if you have PPP, if you did that and you got forgiven, right? Because are there some people still out there that aren't forgiven of their PPP yet?
Well, I have come across some people that were forgiven for the first one, but they didn't send in the paperwork for the second one. And then once we've talked, they've gone and sent in the paperwork to get the second one. But yes. And it's not where you can double dip on both, but if you got the PPP, you just don't qualify for all of the ERTC, but you still can qualify for the ERTC. It's just whatever that you qualified for that was your labor expenses. You don't get to double dip with that with the ERTC. They just kind of deduct that amount out, and then you still qualify for whatever those dollar amounts are.
Right, and that's a significant amount of money specifically for a small business. That's a lot of money, right?
It's a tremendous amount. I mean, just my smallest business that I've qualified for, it was a startup business that started their restaurant in November of 2020. They had 9 employees in the end of 2020, and then through the year with part-time employees, they ended up with like 27 employees. They had a little over $100,000 in payroll, but their ERTC refund that they qualified for was $57,080.
Yeah.
So that $57,000 actually ended up being a huge windfall for that company because it was a small restaurant, and that's
payroll.
Yeah. That's payroll that he was able to get back. Those funds allowed him to put down payment money into an opportunity that he had to go into a spot in his local airport. So then he was able to expand and double his business. So
I love it.
Huge opportunity.
Yes. Now, I've been through this whole process a couple times already. My larger company, we qualified for the first round of PPP, but not the second round. But then we got a significant ERTC check after all of that settled. A lot of my shareholders were super nervous about this because we did this we've already gotten the funds and everything. So almost a year ago now that we started that process.
Well,
they were really concerned that was a loan. I guess we started that in January of this year. Right. Yeah. So
Right. And it's not a loan like the PPP was a loan that then you
Right.
had to go through the forgiveness process. This is a tax credit. So it's an IRS tax credit, very similar to when we're doing our own taxes and the IRS gives us a tax rebate check because we pay too much and we get $1,000, $2,000 or $3,000. This is just exponentially much bigger,
Right.
in scale. So it is not a loan, it is a tax credit.
Right. So somewhere through this whole COVID process, I know that one of my companies took an SBA loan with super low interest, like 1 to 3% interest over 30 years. What was that? And that was some kind of COVID loan as well. It
I don't
was
remember
special.
the acronym for that, but the SBA did roll out some loans, and I've had a couple of people, they mention them and run through those
Right.
loans. And yes, SBA, you're tied to them and you're going to have to go back and pay that back. This is
Correct.
completely different program. And one of the
And
reasons,
and they're not dependent on each other, right? I can have that SBA loan and I can still get the ERTC money.
correct, completely different situation. And one of the things that really makes it sticky is that with the employment retention tax credit with CPAs, accountants, bookkeepers, they are not typically wanting to touch this because there have been so many minor rule changes and there's been multiple legislation changes to what the ERTC program is.
Right.
And typically, the accountants and CPAs, to their credit, are risk adverse for our protection, right?
Right.
And so a lot of them, because there's kind of some quicksand under the legislation and the rules, they don't want to spend the time to learn everything about the ERTC. Fortunately, we have some our CPAs. That's all we're doing. We decided to buckle down and really go after that and learn that. And a lot of companies will have that same very questions like, well, I got this small business loan and I've got the PPPs and I don't know what I'm going to qualify for. And it's very tricky because every locality had different shutdown mandates. And so every business is going to be just a little bit different. We even have a legal team that will go through and search when were the mandated shutdowns in this locale so
Right.
that we can maximize and optimize your qualification. And the average CPA doesn't have a legal team behind him to go back and figure those things out. And so, and we do. So there are a lot of small moving parts that you have to stay abreast on. So I can understand your business owner's quandary about, is this going to get us into more trouble? Is this going to
Right.
raise some red flags? So
Now, your firm's a CPA firm, so if they go to a firm like yours, are you ensuring in some kind of way that this is the right number that they're getting back? Like, at the end of the day, if legislation does come back, who's going to be, like, I have a CFO on payroll because he's the one that's going to take the fall if he does something, if he obviously he doesn't let me do anything wrong, but it's a lot of math, a lot of moving numbers, and it's scary, right? So
right. And we have our CPAs are all licensed CPAs that are going
Right.
to do that. We have a quality control team that will come in and look at the documents and make sure that we have all the correct documents to begin with.
Right.
Then our CPAs will then go and look at that. And when they sign off on that, our CPAs are signing behind it. And since this is the only thing that we are doing, we are making sure that, hey, when I tell you you're getting X number of dollars, you're getting X number of dollars. We're going to provide all the backing because we'll have your documents. We'll provide all of our documents,
Right.
and we'll stand behind the ERTC. Now, if there's something else going on in your business that we don't know about, that's another issue.
Well,
But
you have to assume that if you're not lying, right?
right,
And for the small business owner out there in the world, having a CPA or a CFO, what that means to your company is that if there is something wrong, the liability falls on the CPA. As long
correct.
as now, if you're lying to them, you're just doing illegal stuff, and that's not good. But and then they're not liable anymore. But if you've given them all accurate, true information, then you can kind of sit back and relax. Say the liability's not on me anymore; it's on the CPA.
Correct. And we'll defend any, any type of actions with the IRS if they decide that they want to take a further look.
Right.
Some problems are with companies that falsified their PPP.
Oh.
And it did weird things with their PPP, and then they're raising their hands with the ERTC. So, there is some conflict. So before you go through the ERTC, you got to make sure your books are right, because you don't want to go forward with this special dispensation from the government and to raise any red flags, with them. But most businesses, we have our W-2s. We have a payroll company that's paying that we're paying into our payroll account. The payroll company is paying all the W-2 employees. Everything is being tracked. All the documents are being tracked at the time. So there's not really a whole lot of hanky panky that can go on there, right?
Right.
And the great thing is about the ERTC, most small businesses that have a payroll company that are paying their payroll taxes quarterly already have all the information.
Yes.
And that makes it really easy. The challenge that I have come across is that the owners get excited about, hey, I could get $26,000 per W-2 employee, and then they don't follow through with either delegating to their bookkeeper, accountant, CPA to get the information in, or something comes up in their business the next day and they don't take action and go forward.
Right.
And with, you got your ERTC in earlier, but now as more and more businesses are coming in, it's more imperative that you go ahead and get everything in and do that sooner rather than later, because the IRS is dragging their feet more and more.
Yes. All right. So I'm going to put you on the spot here. I had a meeting this last week, about an 8-hour meeting on ERTC, right? Or small businesses, but ERTC was a big part of it. And one of the statements that was made over and over and over, which is a scary statement, and I'm going to let you ease through this one, is if you get the ERTC money, that's going to be audited at some point. Do I increase my exposure of an audit from the IRS if I get this money?
I honestly have not seen that yet, so I don't know the answer to that question. That is a big fear that I get, from a lot of business owners that I speak with, is like, well, I got the PPP and now I feel like I'm double dipping and asking for more money from the government. If you are audited by the IRS with regards to the ERTC, since we are a licensed CPA firm, we're going to have our ducks in a row. And as far as regards to the ERTC, we're going to be able to provide states evidence and give them everything that you provided us and everything that we did in our methodology, and we'll be able to back everything up. The one powerful thing that we have that several ERTC firms that I've heard of, and I don't know for sure, they don't have legal teams that they're talking about that will be able to back up when the shutdowns were. And since we attach that to our, to our filings, and we have that's a big part of it, because, if a business is saying, oh yeah, I was shut down for 2 years, in Florida, well, we know Florida wasn't shut down for 2 years. They were, more aggressive than that. Now, if you were in New York, California, maybe there'd be some more legitimacy to that. So
in some municipalities, even, right? Like this is a big carton of eggs here that we're cracking.
Right. So I live in Atlanta, and just outside of Atlanta, and Atlanta had many shutdowns that the city that I live in, Decatur, was next door, that did not have, and it was in a different county. So our legal team, looks at that. And so there is a lot of minutia that the average CPA and average accountant doesn't want to go and take the time to learn all that stuff, because if they were to fill that out and they didn't specify or know the specific times that the shutdowns were, were under, were going on, that possibly could catch you. And that's one reason why the average CPA, accountant, bookkeeper is not wanting to touch the ERTC.
So a couple, and I'm not a financial advisor, business advisor, and my obligation, obviously, Donald, I want you to get as much business as you can from being a guest on the show. But my advice would be, if you're going to don't go on this on your own, for sure, right? Don't try to fill all this paper. Get a CPA of some kind. Make sure that they have a legal team behind them. Make sure that they're a reputable company that has, they're insured and bonded and all those other things. What other components, should somebody be looking for when they're choosing a partner for this ERTC?
Well, I think you hit a lot of the main points. One of the things our firm has done has completed over 3,000 filings so far this year. Wow. So the difference in the knowledge that we have over the average CPA who may have done 1, 2, 3, or 5 filings is significant. We know all the different angles to look at. We know what to click on and, or what to choose and what not to choose. Right. Whereas a CPA who's not doing this full time is going to be a little bit more risk adverse and is not going to qualify you for everything that you're potentially qualified for, so that he doesn't risk causing a problem for you, which is, is understandable, but it holds you back, or it holds the small business owner back for even possibly getting a larger return, even if he has to go with a larger firm.
And my opinion on this whole bucket of money right now is that it belongs to the business owner or the businesses. That's who this money belongs to right now. And to me, this is just the paperwork that you had to fill out for the government to release those funds to the business. It's your money.
Better.
Right?
That's
it is
right.
Absolutely the business's money. We did the employment credit. We kept these employees working, sometimes with no work to do, right? We just kept paying them like, hey, there's no money here coming in, but I'm going to keep paying you because I know that I need you to run this business whenever things get back up and running. And we did that. A lot of us business owners did that at our own. I mean, I know I took money out of my pocket to make sure that my employees were paid during that time. So this is, I think, one of the better programs that America's done.
Well, we without going and debating and all the COVID shutdowns and all that and everything that was done, this ERTC program, I agree with you, is one of the best things that the government has done to reinvigorate and say, hey, I'm sorry, here's a do-over, because so many small businesses really, really struggled during that time, to all of your points. And so this is a way to recap and revitalize these companies. And one, we had all those lost revenue in 20 and 21, and now we're getting hit with the highest inflation that we've had since we were kids.
9%.
Yeah, 9% now.
Almost. So that's crazy.
and that's hitting not only is it hitting the business, but it's hitting all of your employees.
Yes.
So as a business owner, regardless of what you think, whether you're going to qualify or not, you need to look and take it upon yourself to see if your business does, and to see where it goes. Because even if you qualify for, like my very small business, $57,000, how does that help your cash flow this year?
Some businesses, that's a lot. That's huge.
Right. That means
I know a lot of business owners that are right at the $300,000 mark, right? Three to 500,000. A lot of business owners are in that bucket. So 50 grand is life-changing.
Right. We had a restaurant with a 2-location restaurant. They had right at 90 employees. I don't remember the exact number. And they qualified for $1.9 million. And that is crazy, what you're doing. The average return that we're seeing on the small businesses is a little over $150,000. multiple chain franchises, whether it's a restaurant or whether it's, a shoe store or a clothing store.
Yes.
When you start having hundreds of employees, you start ramping up the dollar figure for either your individual EINs or for the group EIN. And it can be really significant. And not only it's life-changing for that business, for the cash flow, because 9% interest or inflation, everything is costing you more. Everything is costing your employees more.
Yeah.
Why do they want to show up if this business doesn't know what's going to happen in the next couple of months?
Yeah, at one of my businesses, I just implemented because it's larger staff and it's got mid-pay people. We initiated a fuel bonus every other paycheck or every paycheck, right? So we're giving literally until the fuel costs get back to something regular. I mean, we're giving them $100 a paycheck extra just to cover their fuel costs to get back and forth to work. So
that's amazing. And the ERTC tax credit is something that all businesses could do something similar to that, to help out their employees to garner that desire of like, hey, this company really cares about me. And
gotta do something today.
Right.
Keep them.
Right.
Yes. So now I fill out the paperwork. Is it still about 6 months from the time that I start the process to the time I get the checks?
Well, it depends, and it depends largely on the IRS. We are seeing, so we're seeing people that put their got everything in December and in January. We started seeing them get theirs in June and July, in 6 months, 7 months.
Right.
So, it is growing. The process, once you start the process, it goes back and a little bit for some owners. I've been able to get all their information within 24, 48 hours. Right. Sometimes it takes a week or two. With my multiple location businesses, those tend to take a little bit longer because we have to jump through some hoops. But on average, from you turning in all of your documents to us and for us to process, you could look at somewhere between 4 to 8 weeks to figure out what you qualify for.
Okay.
Typically, once we have all the documents, it'll take our firm up to 15 business days to get that. So it really depends on the responsiveness of the owner.
Right.
And then once we turn that in, that's when you start the clock on the 6 right. to 12 months that it'll take the IRS to get that back to you.
So IRS is going to give me a whole bunch of money. Is that income at the end of the year, settlement? How does that look? How do I account for that? Or is this just a taxless windfall of cash?
It is a windfall tax credit. And I do not know, since I'm not a CPA, what the tax ramifications are going to be for that. But there will be some type of tax liability on that. To what degree that is, the CPA is going to have to answer that question.
Okay. And that's going to be you talk with your accountant, your CPA, your CFO, lawyers, all
Correct.
Those things. At the end of the day, if money comes in, it's going to be taxed. I don't know how this is going to be taxed, but we'll see as this all ends. I think a lot of business owners have some loss to carry forward from this last 2-year run, that it's not going to be that big of a wash.
Right. I think exactly. It's not going to be. It is well worth the endeavor to go through doing this. And
right.
So I have another restaurants just happen to be the easiest low hanging fruit that it's the easiest to prove that you were affected.
Right.
I have another restaurant story where when COVID hit, he had 2 locations on his businesses and he just stopped paying taxes altogether. He stopped everything. And it has taken him a long time to come back to get his paperwork in order. So he spent, the last couple of months getting everything, going back, looking in the files, getting the paperwork done so that he can be in position to go ahead and file. So it can be a challenge. It's well worth it. It's well worth him going back because he has 56 employees.
Right.
And
Wow.
it's going to end up being very helpful for him at the end of this year. It's like, hey, I'm glad I spent the time to get that through, even though I may get taxed on it a little bit. I've gotten caught up with my taxes.
Yeah.
I've gotten this windfall. And now, now I'm going forward in my business.
Paying taxes should never be the reason not to make money.
Correct.
You just keep moving forward. Worry about the tax on the backside. We'll take care of it. So, all right. So now you're going to get this big check. It might have some tax liability. We don't know yet. It's got to be a ton of paperwork that I need to get this done, right? Like, how much time and effort am I going to have to get all this paperwork together?
Well,
am I stopping all my sales to do it, or what do I need?
So what we do at myertcrefund.com, we have a simple intake form that just basically name, email, address, phone number. Do you own this business? Do you own multiple businesses? And that's it to get started. You will get an automatic email sent out to you that has a form for a questionnaire. That questionnaire will probably take you the longest to fill out. Then, since you're paying your quarterly payroll taxes, your payroll provider either has or can produce your 941 your tax returns.
Right.
And you can you can save that file in an Excel spreadsheet that's highlightable. And then you go and you upload that file. We'll need your W-19s, your W-3s for 2019, which tells you how many employees that you filed for. We may need your 940 tax files, but we need your 941s, and those are for Q2 2020 through Q4 2021, and your payroll journal, and that's it.
I need my profit and loss statement, though, right, for all of those quarters.
Yes, also that. And if you're paying your taxes, you have all those files already. And so it may be delegating that to your financial advisor to do that for you, or you can go in and do that. I've had people do it every which way.
If you use a program like QuickBooks and you have a payroll company, it's like an hour of work total, I think. Right. For most people, right? This is not QuickBooks, you can hit the print P&L button. They're not looking for, I think they're just looking for actuals, right? They're not looking for fancy P&Ls. They're just looking for a profit and loss statement. They're looking for in your payroll documents.
Correct.
Pretty much it. Like it was the easiest money that I've ever made in my life. Hands down.
So would you say, what would you say your hourly rate was for your return on your investment?
Oh, like $500,000 an hour. It was huge.
That is crazy.
Yeah, it was the best hour of my life. Like, no, I did the work and then we waited 6 months.
That is so great to hear. I'm excited to hear about your story with that, and I am sure that'll have years worth of influence in your business because you all made that decision.
Yeah, and then so my gym though, on the other side of the fence, I also own a boxing school, and it's a much smaller business, and I unfortunately, as much as I tell people to know their numbers and got to keep your profit and loss statement, I run that business more like a household income. I keep the checkbook. I don't do profit and loss statements. It's more of a hobby business for me than anything else. It's I love it to death, but it's not that important to me to keep the profit and loss statements. So I don't. So right now I'm going back, and I got to go back 3 years and redo my quarterly profit and loss statements. And it will be the last time I ever have a company that doesn't quarterly do profit and loss statements just by default. I'll never do that again.
Well, that's a really great point to just stay on top of your numbers.
Yes.
And I had another restaurateur that was just amazing. He's like, I'll have that to you in a couple hours. And sure enough, he had everything done within a couple of hours and had everything buttoned up. As far as we got off the phone, he had to get to wherever he was going, and then he sent it in. So the biggest obstacle small business owners have is the fear of the unknown, and the fear of like, oh, I don't want to look at those books, or I don't want to crack that, open. And hearing your story, you got $500,000 back.
Yeah.
That's amazing. For just a little bit of work, the longest thing that we're going to need is having you fill out your basic questionnaire of what was going on during the shutdowns. And your accountant bookkeeper has all that information. You could we'll send you an email with a link to upload the files. You can forward that email to the accountant and say, please upload all the files that are necessarily needed.
Absolutely.
And then,
and I'm by far not a QuickBooks commercial at all. But if you use QuickBooks and use QuickBooks Payroll, man, it is just a button push.
Right.
It is that simple.
And with several of the higher end programs like that, you can go into your payroll and you can pull out your payroll details or payroll journal.
Yes.
However it's called. You can do that and run those reports. One report for 2020 and one report for 2022. You make it highlightable, and then you're done. And that doesn't take. So really, it's kind of like, it's like, I don't want to go into that tax closet because I know that's always something there is going to bite me. Well, this time when you go in there, it's something wonderful is going to happen. So
yeah, like it's all good on the other side of that. And I would really encourage business owners that are having that, oh, I don't want to look at the checkbook because I don't want to know how much time I have to live. And I've been there. Like I know that game all too well of, oh shit, I got to come up with money today to make payroll. If you're in that boat, use this as an opportunity to fix that problem, right? Get out of that habit. It's a bad habit to be in, and probably your business is suffering because that's the habit you have in reality.
Right. And yeah, this is, and another really neat thing that we're able to offer. This is only for the people that are really in a, that really need the money now, as opposed to waiting 6 to 12 months for the federal government. We do have an option to get a rapid rebate, so that once everything is filed, we can get your money within 2 to 4 weeks. And it does.
That's going to cost you a little more money, though, right?
It is going to cost you a little bit more money, but it is an avenue if you have an emergency right now in your business.
But it's money from my windfall. It's not money out of pocket.
Correct.
Which is different.
It is not.
It feels different
not,
for sure.
Exactly. It's you're getting the money faster, and you're implementing it in your business sooner because you need it, because you're having a problem, whether it's all the problems in the past or it's coming the recession and you need to gear up right now and you don't have time to wait. I have another example. It's a restaurant. I'm restaurant heavy today because those are all my best stories. They have an ownership group of 3 restaurants. One of the restaurants is really struggling, and they are doing the ERTC, and they're going with the rapid rebate. They just signed up, so I don't know what their numbers are, but they have 97 employees.
Wow.
With their 3 restaurants that they have combined. Now, a lot of them were part-time, coming in and out, but they're still going to get a pretty sizable chunk.
Right.
And he's going to use that money to change the concept of that restaurant because it's dying the way that it is.
Right. All right. So I've got one last question, and it's right along that line. What can I use this money for? Like PPP was, I had to use it for specific things. What's this money for? That
is a great question. It's just like a tax rebate check that we get from as individuals. We can use that money wherever we want. So you can use no restrictions. You can use that money anywhere in your business that you want. You could either reinvest it in marketing, reinvest it in equipment, or you could give everybody a pay raise, or you could go on a vacation yourself. So there are no restrictions. Like to your point, the PPP loan, there were several restrictions of what you could and what you couldn't do with that money. And where some people got in trouble was they use that money for other means.
Right.
And you do not have that issue with the employment retention tax credit.
Okay, I'm a liar. I have more than one question. So, and I know that there's a lot of people in this very specific boat right now. They made it through 2020, right? But they had a lot of battle scars, and they didn't make it in 21. They shut their doors. Are they still eligible?
Oh, that is a great question. Yes, they are. So I had a warehouse business that closed their doors December of 21. They had
Right.
40 employees, and they went ahead and they went through that process too. They shut their doors down and they didn't make it. So all the small businesses that that lost everything, this is still this still can help you.
Right. So this would just be
Um,
recovering some funds for the shareholders at that point,
correct. Correct.
or getting the business back up on the floor, whatever you wanted to do.
Whatever you want to do. If it is significant amount of money that you see that and you are like, hey, we can get back going again, go for
Right.
it. Or if
Now,
it's
obviously, the nuance there, I can see if I just shut my doors, but I didn't dissolve my business, absolutely, I should be able to just go back and do that and then make the decision. Am I going to keep pocket the cash and do something else, or I'm going to try to get this business revived? What if I dissolved the business completely during that process?
well, you still had the dates of when the business was in operation,
Right.
right? And so it falling in between those those 7 quarters from Q2 of 2020 through Q4 of 2021, you're good. You're okay.
If you retained employees.
If you retained employees, correct. Now, there is a little bit of a nuance. Um, New startup businesses qualify for the ERTC through Q4 in 2021. There is talk about maybe adding Q4 back in, because at one point in time, Q4 was available to qualify for. But if you shut down your business in 2020 or 2021, and even if you dissolve the business and didn't keep that open up until that date of dissolution, you can qualify.
Wonderful. So I can't see any flaws throughout the whole process, right? It's free money. It's very little work to get it. It's as long as you maintain employees during the government shutdowns, you are eligible for some of this money.
Right. You're being rewarded for continuing to take the risk for that employment, and the government is thanking you for keeping your employees. And that's really what that is.
Donald, if somebody wanted to work with your team specifically, how would they reach out to you?
Well, they could go to myertcrefund.com and fill out the information there. And that'll go ahead and start the whole process. And we can go from there. And, we can, of course, give them my contact information in the podcast too.
Wonderful. And we'll throw all of that information down here at the bottom, so that if you wanted to reach out, you would have a place to start. I did not use your firm. We didn't know each other at that point in time. So, but I love what you're doing. It's an important service for the business owners out there. I do have one more question though, and I think it's the last one. Solopreneurs, Uber drivers, all those guys, do they have anything here?
Unfortunately, no. It has to be W-2 employees.
The 1099s are out.
1099s are out. This is designed for small businesses. So, and really our firm cuts it off at 5 W-2 non-owner ownership of the W-2s. So if you have a minimum of 5 employees and a minimum of $100,000 in payroll, then you're going to qualify for something. And you need to go and look at it and see what you qualify for. One thing that I am really enjoying about the ERTC is it is a way to bless businesses for sticking it out and suffering through all the junk that happened with all the shutdowns.
Right.
And that's really, it's so fun to hear the stories of all these different entrepreneurs and listen to the struggles that they went through because everyone had something different happen. You know, you were making payroll out of your own accounts. A lot of business owners did that, and they believed in their business. They believed in what they were doing. They thought they had a good service, and they wanted to maintain their employees. And this is a reward that the government hasn't really ever handed out before, for taking that, you know, that risk and being that small business entrepreneur. And it is a joy to be able to talk to businesses and say, hey, you're getting $200,000 back. It's really is
one of the best jobs on the planet right now.
Oh, it's amazing. It's amazing.
Awesome. Donald, thank you so much for your time today.
All right. Well, thank you so much, Ken. I appreciate the time.
That's it for today's show, folks. If you'd like to join my text line community, the number is 314-370-2871. All you have to do to join that text line is send me any question about business or technology. I'll do all the research, and I'll give you an absolutely free, totally unbiased answer. Get to work.